Hello traders, Gary Wagner here. It is Monday morning, approximately 10:15 in Honolulu, making it 3:15 in New York. It is the 10th day of October, and this is the daily report for gold and silver. Well off of the lows of last night, but still trading lower. We do have the precious metals under pressure today, with gold currently trading at 1775 and change. That is the bid. The ask is 1776, putting it down 530 and 630 collectively on the day, about a third of 1%. Silver is also trading under pressure, but actually down about 1.5% on today's trading activity. As you can see, hovering just above $34 an ounce. You can see current print on the board is 34.03. It has had a low of 33.70 and a high of 34.24. High on gold today, 1777, and the low, 1765. Traders, we are looking at a 360-minute chart, straight cash market of gold. And here's what I am observing and I feel is a little bit on the noteworthy side. We'll talk about the fact that we've got some really strong resistance. We have pointed that out to you. That's at that $1,800 mark. The next chart will clearly illustrate that. However, what we can see is this. When we take a look at the way that this market's been trading, you can see how we had this market move down, but it was able to find support in overseas trading last night at around the 1765 area. You can see that you've got on a 360-minute chart, roughly 6 hours, you had it testing that particular area for support pretty much on a regular basis. We find it here, here, as well as here. Now, following this doji, and again, dojis on a short-term or long-term chart are going to typically indicate a reversal point or a point in consolidation. And what you can see in terms of just the short-term activity is that this doji is surrounded by a lower close prior to it and a higher close after it. Now, what does that mean? Well, what you're looking at in terms of a straight candlestick pattern, is a three-river morning star. It really fits the definition. In other words, after a defined downtrend. Well, can we say that we got the defined downtrend? That's absolutely correct. We did get that because that's the first characteristic of the three-river. And what you'll get is you typically get a long red candle. Long red candle is just relative to the other candles around it in terms of average body size, and you get that. That will be followed by, in a regular market that has open and closes or something that's not continuous. Now realize this is always going to be a continuous chart because it's a 24-hour market, but you'll get a star. So you get a very small bodied candle. That candle doesn't have to be a doji. And on a daily or a weekly, in its best form, it actually gaps below the sessions of what's following it, what's preceding it, and then that's followed, of course, by a long white candle. That's these three candles here. Now, to actually take that signal, if we were using it as a trading signal, of course, you would wait on the following candle. You would want to see confirmation. Now, confirmation on this particular type of candle, let me get the proper color, is going to be where you've got a green candle with a higher high and a higher low. It would look something like this. So if you got this in terms of a short-term trade, you would actually look to enter the market. As this candle was forming here, you could actually make a play for it. Now, traders, that's the short-term look at the market. That's very close, detailed look. When we step back, and this, of course, is a weekly chart. It's also the cash market, but we have been using this chart to point out a couple of things. There can be no doubt at this point, if we look at really the 1800 mark, let me draw a line as straight as I can across that. There can be no doubt when we look at the market in that way, we did have this double top. We identified that. We also said that as this market begins to move up, if it finds some resistance, this is probably the most logical point that it's going to find it at. And we can say without a shadow of a doubt it has, because over the last 3 weeks, if we look at this on a weekly chart that we can blow up, and let's go ahead and do that. What we're looking at, traders, is simply a weekly chart in which we have the MACD, moving average convergence divergence, as well as the fact that we've blown up these last candles. And here's what we were talking about. There's no doubt 1800, let's go ahead, and this will be an easy straight line because there's a guide for me there. But there can be no doubt we've attempted it on one occasion, but it, as you can see, it's really kept below this particular area. But what's significant isn't so much the fact that it hasn't been able to trade above it. To me, what is significant is the body size that you have seen in these candles, because you can see that they're very, very small. And these very small candles are indicative, of course, of a market either consolidating or reversing. The fact that it's up by that 1800 point means that it could be doing either, because it's a logical place to look for a retracement. But also, if the market is going to trend higher, it's a logical place for it to consolidate before doing that. Now, that being said, of course, this is only one day in trading, and this, of course, is our new weekly candle as it's beginning to form. It started yesterday when the market opened up in Australia. That's where you can see these lows around, 1765. And as I said, currently trading off about $6 on the day, 1775, 26, 27, current print as it still trades. Now, traders, all I have done here, this is that same weekly chart we just looked at, but I've turned it into Henkin candles, meaning an average candle. Why have I done that? Because as you can see, the uptrend is certainly weakening, no doubt. On a weekly chart, and that's, we're using a lagging indicator, first of all, which is the Henkin chart, and a weekly chart, which of course is going to lag against your dailies and intraday. But the reason for looking at as our final chart of gold today is the fact that although the market has been softening, although the market has been under pressure, as far as the big picture goes, we could certainly see this market consolidate, move back up, or consolidate as it does here and then go into a retracement. But we haven't gotten compelling technical evidence which would support either conclusively. And until we do that, we're really in this wait and see mode. We've talked about the fact that silver really tends to shine, and as the market is moving up, we get, in terms of percentage gains on the date, much greater percentage gains in silver in relationship to gold, how gold has moved. Now, at the same time, when the market moves down, you get that reciprocal effect. In other words, you're getting the same type of downside pressure that you were when you saw that upside move in silver. Silver also under pressure today, but here's what I am noticing and what I consider noteworthy. Of course, I believe we have absolute support, 33.24. You can see that's where this low is in here. We are still long this market, and we're long this market from roughly this area. We got in at $29. We've got a tremendous trade on our hands. The market is still sitting at 30, as I say, the stop is sitting under 33.20, and we're sitting at around $34. Now, I did send out a survey this week, and for those of you who have sent it in, you've given me some great suggestions. One of those suggestions that I'm absolutely going to implement, I'm trying to figure out what the best way to do that is for those traders that maybe aren't in our primary market call, meaning they didn't get in at $29. Should they be sitting on the sidelines? Should they be getting in? And so what I will be doing over the next couple of weeks is designing a protocol that will allow traders that are just joining us as new subscribers, or for one reason or another aren't in that trade but want to know should they be participating. We will be adding that as a feature to the daily edition of the Gold Forecast. That was a great suggestion. We're immediately going to implement it. Also, if you have not, please fill out the survey, because the only way that we can make this service the best service for you is to get your ideas, to know what it is you're looking for, what it is you're happy with, what it is you think that we could make better, because we're constantly striving to produce the very best service that we can for gold and silver investors. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.